when you have a property and you sell it, and there's a gain, like you bought it for 100 and you're selling it for 200. Let's not get complicated and talk about how much money you put into it. Let's just keep it simple. You buy it for 100, you sell it for 200. Your gain is $100,000. So the IRS calls that capital gains, and you're going to pay somewhere in the vicinity of 30% plus or minus on that gain. Now, if you want to avoid paying that gain, you do what we call a 1031 exchange. And what that is an exchange for a like-kind property. In other words, you have a residential property, it's going to go into a residential property. And so you'll take the money, the gain, and you'll buy another property. You have time stipulations on when you have to do it and how quickly you have to do it. You can't do it 3 years later. I'm not going to go into that either, because then it's a 1031 exchange. That's a whole podcast. But anyway, you take your profits and put it into another property. And as long as you put it into another property, you don't pay the gain. Now, the caveat there is that if you ever sell, if you can 1031 exchange all the way up to 1,000-unit apartment complex. You can keep growing and growing and growing and taking your profits and putting it from property to property to property. However, if you do that and you decide to sell that property when you get older, you will be liable for all the gains that you had previously. So it's not an escape hatch. It's just you're just putting off the gain till later. But if you never sell the property or you keep exchanging it, then you'll never pay it. Your heirs will have to deal with it, but that's not your problem. You'll be dead.
Right. And it's a great way to move up and get bigger properties.
Yeah, it's the best way. It's the only way. So, I'm not a big proponent of selling properties, but if you can exchange to something better that makes more sense, then do it.